The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, dear into the breach, dear friends. And, well, we certainly have a market that's got action. And the Chinese curse that says, may you live in interesting times. The last quote I see out here is 2070 on the S&P cash. If my calculations are correct, which they may or may not be because this machine is fighting me here in the studio, we're off 13 points on the S&P cash, 2.2 billion shares on a Friday. So a little decent volume on the Friday. Not a huge move in this market. We're only about 3 points off the lows. I suspect that we're going to have light volume over the next week. Most people don't think about it a lot, but this is when most of the broadcasters are on vacation. Come Monday, my guess is you're going to see a lot of those folks missing. A lot of people on vacation, and just about everybody gone. In fact, I remember going over to Europe in August and finding nobody. I mean, literally skeleton crews everywhere you went, and just figured out that it was not worth going to Europe unless you were going on vacation in August. But kind of gets that way here. And then, of course, after that, we get about a week, maybe 10 days with low volume also, because everybody's headed out to the Hamptons for the last of the summer. And normally what will happen is the big boys of Wall Street will say to the B team that they leave there, don't let this market move. They may not have a chance this year. They may have to come off the beaches early because the market's already started to move. And, of course, that September date for a Fed rate increase is probably going to, haven't looked at the Fed funds rate by the end of the day. I thought they'd probably be 98% for a September move. We will see. I'll have to check it when I get home tonight. I don't think I've got anything here in the studio for it. But it certainly is a big day. We're down testing previous lows of not that long ago. It was very interesting to watch the people on CNBC finally think that there may even be just a hint of a pullback that could happen in this market. Of course, if you look at these charts, you could have a fairly decent pullback to 1900 and it wouldn't even phase a bull market. But there's almost a belief that if this market even pulls down a little bit, that it will all go to hell in a handbasket. My guess is that, 1990, I mean, just on this run would not even phase a longer-term bull market. But I'm of the opinion still that until we get that Fed increase and they actually take the monkey off the market's back, that we are going to see continued pressure on this market. And, of course, so many stocks priced for perfection and absolutely getting the Dickens, that's a technical term, Dickens kicked out of them. Let me see if I've got that there. Just getting a few more things fired up out here. Appreciate everybody that sat in for me yesterday. I guess it wasn't everybody. It was one person. The wonderful Basil sitting in for me. I was having technical difficulties again with the internet. Computers again conspiring against me. I know that they want me to know that they're in control, not I. But it is tough. And in fact, it was still not working today. So I had to come in over here and use the computers. But hopefully it will be fixed by the time I get home, and I will be back to doing my show at my palatial estate in Tampa, and where everything is exactly as I left it. When you use somebody else's computer, it's always a little bit different. It's kind of like staying over at somebody else's house. It's always nice to know exactly where your toothpaste and your toothbrush is, and you don't have to move that kind of stuff. Yeah, I do digress, but I've got no history to play here. That's another thing. I need my sounds. And I don't have them today. Anyway, I will sing a little bit of history repeating, and that's as well as I sing it, so that's it. Anyway, on this day in 1942, the U.S. 1st Division begins Operation Watchtower, the first U.S. offensive of the war, by landing on Guadalcanal. Of course, that was on the Solomon Islands. That was on July 6th, 1942. Boy, talk about an engagement. I don't think it was over until February 9th of 1943. And some of the worst fighting of the entire war. Of course, a lot of people were shocked because it was really the big first major engagement with the Japanese, to see that they would do anything and die for the emperor. They'd been told a lot of things about what they would do to them if we caught them. Apparently they were vastly exaggerated, and many, especially of the women and children, there was a giant mountain. They went to the top of the mountain, jumped off rather than be captured by the evil Americans. And of course, a handful of them couldn't kill themselves and were shamed by living a long life. And maybe they were treated roughly, maybe not, but probably a lot better than jumping off a mountain. And February, I think it was February 6th or 9th. I think it was February 9th of 1943. But we always think we have problems in this country. Boy, there were times when we had real problems. A lot of people talk about their problems, and they all, I think of probably some guy in the middle of a desert in Africa thinking about how he's going to get his next cup of water, and where he's going to find some additional food. And of course, we're worried about spending an extra minute in the drive-through lane at McDonald's. There are real problems. We face those problems. For the most part, we focus on things like someone shooting a lion in Africa, and dismiss the real problems that affect everybody in the world. But took them 2 bombs to surrender. They were confused. A lot of people wanted to fight continuously then. In fact, they had to talk the military into it even after they told them to do it. And one of the letters that came back from the emperor said that if they didn't have an emperor, then that told them and continued to sit on the throne, that they were going to the military was going to continue to fight because there would be no emperor. It was a very strange way, of course, different cultures and all that. But I don't know. I kind of like them, especially now, the Japanese. If their kids do something horrible, they'll go home and kill themselves. Generally, over here, it's kind of like those 2 kids that shot up the bank out there in California, put on all the armor. What was it, about 1997? Shot up the entire town, 4,000 rounds later. And what does the mother do? She blames the cops. If I had some parents that were Japanese, or that lady, I think I'd probably take the Japanese parents. Just a thought. Anyway, back to the market, which is already in progress. I'm not going to get too far down into the weeds for news, because when you get like this, it doesn't matter. There's one thing that I tend to look for, and that is complete demoralization, to take my ill-gotten short gains, of which we have many in the newsletters. Most of them are doing extremely well. I think we're going to score once again massively in the biotech sector. So it is going to be nice. When we look at some of the other markets out here, gold's up about $4. So we don't have a lot in there. 16 cents up on silver. So commodities are not really telling us a great deal. The dollar really hasn't, it moved back a little bit. To me, that looked like a lot of Fed work out here early in the morning. Someone was pushing on the dollar quite a bit, and we're off 31 cents. It's no big deal. I still suspect that over the next few days we're going to gap back up. But it certainly looks like the central bankers are doing everything they can to make sure that that dollar doesn't break above 100. I think they can only slow it down. They cannot stop it. See if there was anything else. We talked, a week ago on Friday about Apple, that it was going to 115. It's at 115.09. I think it got down to 113.30 cents or something. I think I saw that. It may have gone down a little lower. But it continues to be one of the indicators out here that there is problems right here in River City. And it begins with P and it ends with L. I forgot to tell everybody I was in the Music Man as a kid. I didn't have any speaking lines. I ran around with a trumpet for some reason. I can't remember. It's been a week doing it, and I can't remember a thing, or even going there. I can remember that vaguely that I did it. But what else? Let's start looking at some stocks as we get into the day out here. We do have kind of a little Gartley that's set up in Apple, but more than that, it's not a very well-formed Gartley pattern. It is rather large. To me, more of the issues out here are the huge gap that this is in. It did gap down on, or gap up on 146 million shares. When we came back into it, we had 124 million shares. Now we're kind of just playing around that level. As we continue to look at stocks in that sector, in fact, let me bring some of those up so I can see them. Security, Apple suppliers. We'll see how those guys are doing today. Maybe they can tell us a little bit of what's going on. They're all rather flat. Avago is one of the ones that's actually moving today. Let's take a quick look at that. I'm still claimed peak cell phone last week, and I'm still on that bandwagon. I think that Samsung was maybe 9 months ahead of what Apple is, and I continue to think that we're going to see weakness in Apple till the end of the year. It's probably going to take yet another earnings call that is disappointing to get Apple back under 100, but I think we have all the ingredients out here to do it. Avago Technologies is kind of like a setup in Apple. It did gap up on, 2.3 million shares on the 7th of May. It went through that and into that on August 4th with 4.7 million shares. So you have the really bigger gap that came on the 26th of February with 8.9 million shares, which is going to act as support in there. So you've got basically the same thing in Avago as you have in Apple, which is these things are probably rolled over now. It's ready for the rest of the market to do so. We'll look at some more stocks, and Skyworks is up today. We'll look at that when we come back. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Had a request from the Den, and they wanted to look at the IYR. Yeah, I don't spend a lot of time on the IYR. I look at the XHB a lot more. Just potato. But both of them are pretty much saying the same thing, and that is off these lows that came in on July 1st, you had a very, very light volume. These things, really did not bust through the highs and prove the point. Both of these are just a little shy, but not different than a lot of other patterns out here, where a lot of people were waiting for these highs to come back out and break the highs. Did I put in the XHB? Let's take a quick look at that. Pretty much the exact same thing, which is you got up to these highs, not a lot of volume, and we talked about this, at the beginning of the week or last week? Everything's kind of running into one big fog out here on it. Anyway, fairly light volume. You really needed about 8 million shares to go through the February 25th high. That had 8.4 million shares, ended up with about 4.3 million shares. But exactly the same thing. If you look at the XHB, it was off, the energy was off about 30% on the way back up from that May 6th low. So there's just not a lot out here to say that these things want to go higher or anytime soon. Also saw some very interesting articles over the last few days written by people trying to figure out what actually the impact of a interest rate hike would be. And according to at least a few people that are big in that business, it continues to look like they're saying that even a 0.25% interest rate would be more like a 0.5% or a 0.75% interest rate, and why it's so difficult for the Fed. And the reason why so many people have so much cash out there at zero interest rates or near zero interest rates, and a lot of those contracts are linked to regular interest rates. So if interest rates start going up, those loans are probably going to get closed out and again start a liquidity run in various markets, not just the stock market. And that is really what the Fed is scared about, is they could cause a crash because they've built a house of cards built on massive amounts of leverage in the market. And that market, even just a small tick down up in the interest rate would actually have the effect of a 0.75% interest rate just for the first one. After that, probably not as much, and it would be less. It's an interesting theory. I don't know how you can prove it, but a lot of people have gone back in the past. We really haven't had like zero interest rates forever, and a lot of people are unsure of the consequences. Of course, there's always going to be unintended consequences, especially when you monkey with markets, because they don't like that. It's kind of like Mother Nature. It's not nice to fool Mother Nature. It's not nice to fool with markets, because they will come back and they will bite you. We are trapped at zero, bound to infinity. And wouldn't that be nice if I could play my Saved by Zero sound clip now? Well, Monday I will be back at playing various bogus sound clips, and boy, did I find a bunch of new ones yesterday. Yes, we'll be back on Monday in the old familiar groove. Okay, other things of interest out here. Let's go out and take a look. NVIDIA was actually up on earnings, probably because I was buying 4 new cards of theirs over the last week because of the lightning. NVDA, and if I can actually type NVDA, that's another thing. You get used to a keyboard and it's very tough. NVIDIA, certainly one of these that's up here on fairly decent volume. It popped back up here. Is there any real change to the long-term outlook of this company? I don't think so. It got down to exactly where it should have gone before, and that is back to this gap of February 2nd, where it was tested last time. The original gap happened on the 31st of October in 2014. That's acted as support. The last time, 8.6 million shares on February 2nd. This time, 14 million shares. So you had even more volume on July 27th. You got a little bounce out here. Can they make some money in the short term? And I think the answer is yes. But a lot of this is on video cards. And my guess is it's going to be continually hard to sell those super high margin video cards. In fact, today I saw a great deal on video cards that was almost amazing. In fact, the engineer said, am I imagining things? I sent him over the link. Anyway, it is interesting. Red skies at night, sailor's delight. We'll be back in a minute. Give me a call.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with NADEX. NADEX, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's 0 risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're looking at the IBB here. In the meantime, give me a call at 877-927-6648. We've got plenty of time today. There's not much happening, I think, for the next 30 minutes to an hour. It's all going to be about how we go into this close. 2.4 billion shares. Volume's kind of lighten up. I suspect that we're in a downtrend on lighter volume, and that's going to continue for a while. We've got a taste of the IBB in both newsletters. In fact, almost a double shot of it in the daily newsletter, but both are doing very well. Played the IBB with puts and got them almost perfectly, I think. That's about as well as could be expected. Bought them at the right time, and they're doing extremely well today. We also have some ETFs in the longer-term newsletter, and another biotech company that got kind of hammered down today. So everybody probably feeling a little bit of glee going into the weekend in the newsletters, which is always nice. What we do see today, though, is we had 3 million shares yesterday. We already have 2.2 million shares already in the IBB. I think we've got a pretty good indication out here that we are headed back down to that 330 level, where we've had 2 previous lows before. Now, you know, you had a 5.2 million share low on March 26th. It went back, retested it on April 30th and ran back up. But as far as I can tell, we're probably back into this trading range. This has been such a crowded trade on one side. You got to think that there are a bunch of people on the wrong side of this trade. In fact, I made one trade just because Kramer had been pushing it so hard, and I knew that the people in that trade would be the biggest donkeys when it comes to those trades and would spook the easiest. It's been pretty good for me so far, but I suspect there are a lot of people in the IBB that probably don't have a lot of experience in the markets and are not even probably close to being ready for the volatility that could be in this index at the moment and surrounding the biotechs. But it's either feast or famine in the IBB, and right now I'm going to be on the famine side. Now, this is the easy money. We probably made the easiest of it. My guess is that this could take the rest of the time into the Fed meeting to get down to that 330 area. And like we said before, we were buying a lot of options that were out into October and November, and even some as short as September. And gives us plenty of time to get through what is going to be coming up next week, which, if I'm not mistaken, we don't even get into, we do. This is a long month for options expiration. It's the 21st before we see the third Friday of the month. So we've got a good 2 weeks before options expiration. My guess is we're going to drift down sooner, but we'll know mid next week what options are telling us if this market is just going to go sideways until the 21st. But my guess is that we've got pressure at least into the 12th now. And if it's likely we're going to have a bounce, it'll probably be next Wednesday. Just for options expiration. Probably look for them to push it down as hard as they can. And at that point, it's probably the best time, if you've got a very shorter horizon, it's probably the best time to think about and see how the market's acting and whether or not you want to take those puts or short positions off. But I think you've got another good 3 days, and it could be vicious if we see anything else. It is going to be kind of a light volume closeout here, and a lot of people are going to act bullish once again. But my guess is that we're going to come back Monday and find a whole new group of sellers. We are off 10 points, not a huge amount. And people are already acting like it's the end of the world. And can you imagine if we really had the kind of day that this market calls for, which is like down 50, 70 points or something on the S&P cash, what people would be talking about? Certainly a possibility. Markets like this have a tendency to gap away extremely, especially when people continue to not be scared. The VIX is up a bit today, up 65 cents, and that's about right for what we have. For every percent that you have in the S&Ps now, you're probably going to move about $1 on the VIX. That's about where we're at, rule of thumb. So it's not beyond the scope of reason to figure out that we're out there. But a lot of people still betting on zero downside in this market. If we had a VIX at about 19, I would say that you are much more likely to see some kind of low. And that's probably the point where I will consider taking off positions that are short. But I want to see some kind of fear in this market. 14.4 in a market that's getting stocks slaughtered left and right still tells me everybody is whistling past the graveyard. I can't understand. Everywhere I go, solar panels are being installed. Yes, they are. And at no profit to the company because, of course, what are we getting? Nothing but subsidies in this. And you got to sell when you can. Of course, somebody in the den brought up solar companies. The TAN, which is the Solar Energy Index, is back at its lows, and volume was not all that bad yesterday. But as we've said, these subsidies are going away in 2016. The free cash is over. And what's going to happen when these companies actually have to make a living without subsidies. If it was corn or wheat, consumers would just pay more because they've got to eat. If electricity continues to rise as a price of installing solar panels, my guess is that they're out of business. I just don't see economically how they can, I mean, the only reason they exist now is lots of government money to them and lots of people being forced to buy the electricity from the electricity companies themselves. Kind of a business made in hell, because of course, if you can't make cash when business is good, what's going to happen when business is bad? And it will get very bad unless they figure out a way to store electricity. Of course, Mr. Tesla, he talked about that a great deal. Mr. Musk doesn't seem to do much good for his company. It has gapped away. We were short this for a little while. I didn't like the way it was acting into earnings, so we went ahead and closed it out pretty much flat. Guess I probably should have stayed in this one. Of course, we got into others that did as well with a little less headaches involved in this. Again, true believers in a world of electricity. Not a bad car, just a company that's worth $40 that's trading at $240. And the question is, do you want to hang on for 10 or 15 years until this company grows into the $240 valuation? Or do you want to think about it more like Amazon? Amazon was $200. It went to $10 in 2000 or 2001, whatever it was, 2003, whatever it hit its low. And guess what? It found a way to slowly grow and deliver markets. Is it worth its price? I don't know. But apparently there's a lot more there in Amazon than there is in Tesla. Of course, during the earnings call, they dropped the Baby Ruth in the punch bowl. And that Baby Ruth was they were having production problems. Now, they say that they don't have any demand problems, but I tell you what, it certainly looks like the conspicuous consumption of Tesla cars is getting old, and everybody is ready to move on to something new. If you've got a lot of cash and you can buy a Tesla, it's not a bad car. I just don't understand the idea of one day having to cough up 30 grand for a new battery pack in 5 years. Now, they've got some deals where they will guarantee your battery pack is 75%, I think, in 5 years or 4 years, which is good. The question is this what's going to happen to this company when they have to start coughing up 20 and 30 grand for battery packs themselves? Because the margins are not 100% on those battery packs. Now, maybe the cost does come down somewhat. Maybe they're banking on that. But boy, do these guys have a lot of backside built into this company if it was just mildly successful. And which has always bothered me. Same thing with Netflix is another company that's got a lot of its bookkeeping that is well buried in the future. The idea is they can continue to grow and outdo it. To me, you've got a huge three-gap play out here, and we're going to be watching a few of these. This may or be not one that I play. There's about 3 or 4 that I'm looking at here that I think would get filled. In the case of Netflix, that would take you back down to that $50 to $58 range and a gap that's been around for a while. Let's go back and look at it a little bit. I mean, you've got some smaller gaps out here, but you've got 3 perfect gaps, and this has continued up higher. But you've got one at 100, you've got one that's at, what, 65 to 75 bucks, and you've got one that's, 55 to 60 bucks. 3 beautiful gaps out there, and that is exactly what you're looking for. I would not play this on the short side until, as we've talked before, you get a close under a 3x3 displaced moving average. And that's the 25. Someone's been playing with my stuff here. It's not nice to fool with Mother Nature. What you would like to see out here is a close back below the 3x3 displaced moving average, which is just underneath it. This thing does not have to go very far to start closing back underneath that. I think, it may take months to get back down to this $100 level and fill this gap. And then it's probably going to take a month to come down and hit the next gap. And then maybe 2 weeks to go down and hit the next gap. I don't know how it's going to happen. But Netflix as a company is one of the few companies out here that is got one of the least defendable business plans in the market. I don't know if a bunch of other people are going to come back into this, but it is going to be very tough. I think we've got a phone call out here. Mike in Toronto. How you doing, Mike?
Yeah, hi. Thanks for taking my call. I've been watching the TBT, and it filled a gap today on the daily. And actually, it's going lower than where the gap is. And I'm just curious, do you see like a descending wedge on the daily on this?
I see a gap that's still another buck down.
Wait. Can you show me that on the screen? Like, you see another gap. I have on the daily that 43.81 got filled. Okay.
You're talking Tom. You're talking Tom Baker, right?
Yeah.
Okay. The gap comes from, you did fill one gap, but there's still yet another gap down below it. It gapped up on 4/28, so April 28th. So you've got that, between the 27th and 28th. Huh?
That one's filled.
Today's August 7th, isn't it?
Oh, jeez. That got filled, at the high. The high from April 28th.
No, you're talking about the gap on the 29th. There's one on the 28th, the day before.
Okay.
Okay. You see that one?
The high of that is 43.79.
Yeah. So you need the one that's at 42.50 to get filled.
42.50?
Yeah. Are you watching on Tiger TV?
I'm looking at my charts here. Okay. Yeah. Let me just see. Okay. Okay.
That would be the first gap if that's your play out here. To me, though.
I was looking at the gap above.
Yeah, that got filled, but you still have one more down here. And when you get like 2 or 3 of those, you want to kind of wait until it fills all of them. Because once you start filling one, you start getting all of them filled. But
Okay. I've been nibbling. Like, I just established a runner today. Okay, and so I think you're right. Yeah, I think we can go much lower.
Well, let's take a look at the TLT, which is the opposite side of this one. And I mean, this looks to me like it wants to hit this gap that's just a little cleaner up here.
Okay.
If you're watching it, you've got all those.
I'm watching.
Okay, you've got all those gaps. Let me zoom in just a little closer. I know it's not as easy to see as this. Of course, I'm looking at it from 3 or 4 feet away, so it's tough for me too. But the first
date. Just give me the date on that. That's from April
29th is the first gap down.
Yeah.
Okay. Then it kind of had a sideways day and gap down pretty much the next day, leaving total gaps from 124.75 to what is the top of that one? That one's 127.29. So you've got a fairly decent amount of trading there that is basically 2 back-to-back gaps. My guess is that this close to it, you'd probably look at that 127.5, something like that? Or is that one? No, it's 126. Let me put my glasses on. You want to hold?
Yeah.
Okay.
127.
There it is, 120, okay. Yeah, 126, yeah. Okay, we'll talk about it when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back with Mike from Toronto. My office used to be up in Markham. I used to fly. Yeah, I flew up there every 2 weeks for, 10 years or whatever?
Yeah, about what, back in the go-go days, the dot-com times?
Well, we were just getting out from the go-go times. I moved down here in 97. But from about 1990, 1989 to and then I flew there from here. But yeah, it's...
what were you doing, software development or...
hardware and software development for televisions in Hollywood. So all special effects, that kind of stuff. So I lived for the most of that time in Cincinnati, so we'd be in a little puddle jumper, and we were up there getting harassed by your wonderful and lovely and happy people at the border crossing.
Really? With the Windsor border?
No, at the airport.
Oh, at the airport, Pearson, yeah.
Yeah.
Why were they harassing you?
Because they thought we were going there to work.
Yeah, but you had a permit, right?
No, we were just up there for a business meeting for the day. But they were always certain we were working.
Yeah. So they were shaking you down like they went through your bags and your pockets and everything,
yes.
or what?
All the time, yes.
They asked 20 questions?
Oh, yes. All the time. They were sure we were doing some kind of work. Even after like 10 years of going up there every 2 weeks for the business meetings.
Yeah.
It was always interesting to see that in my contrast to our border crossing south here with Mexico. Of course, people always say, well, you're treating these people horribly. And I'm thinking, well, Canada was very, very tight about anybody even thinking about working up there without anything. Anyway.
When was the last time you were up here?
2003.
Oh, you should see what happened. You're probably still flagged. You're still in the system.
They're probably still in the system. I've been up there enough that there's probably not a lot new other than go up there in the top building. The what is it? Not the CNN.
CN Tower.
Yeah. So you go down there.
For you now, huh? The currency is 1.315.
It's much better now, certainly.
Yeah, and the Blue Jays are finally winning. So.
The owner of the company was always big into the Blue Jays. It'd take me down there every once in a while. Anyway, let's back to the TLT. So, what do you use for software for charts?
I've got 3 systems. I've got NinjaTrader. I've got the what do you call? I've got can I name the software? It's Applied Reality Trading.
No, that's fine.
It's art studies. I have that. I have the quote tracker, and I also have Thinkorswim.
Okay. Since I wrote my own software to do it my own way, what rules do they use for showing your gaps? Do you know?
No idea. No idea whatsoever. I draw a lot of trend lines. I draw a lot of trend lines, and I study this thing. It's kind of like a full-time job. Studying the charts.
We don't have enough time here before the end of the show, so let's get to my point, which is I would look for one of those where you could go back and show the gaps, but only show them if they haven't been filled at least by half. Okay, and that is normally what's going to happen. And, of course, they've got to fully fill them. But there should be rules in one of those programs, and that's probably why you're not seeing those gaps. Okay? And you want to look at them. But I wrote mine to kind of be greedy and find all the gaps.
Yeah.
So it's a little bit different. But watch for those gaps. But you can change the rules in some of those packages.
Yeah, but I'm establishing a runner. Like I plan, we get up to 127 on TLT. Yeah, I plan to load the boat.
Good enough.
Okay.
We'll see you. Same bat channel, same bat time on Monday. So when you can, not when you have to. See you in the 4 o'clock hour, Tom O'Brien.
Larry Pesavento just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.